After spending thousands of hours studying daily bias, I can say that I'm one of the experts at this subject, and since mastering daily bias, I have gone to make over $100,000 in only a few short months. In this video, I'm going to give you the exact same framework that I used to make over $100,000 step by step in simplistic form that even your dog can learn. Make sure you guys watch till the end of this video, because as you watch the whole video, it will finally click. As well as I'm going to give you guys a bonus towards the end of this video that's really going to help your trade. If you haven't already, make sure you guys are following me on Instagram at Arkhamtrades. This is where you can reach me. So before we get into the video, we have to understand what is daily bias. Well, daily bias is simple. It's using context clues inside the marketplace to anticipate whether price has a higher probability of going higher or going lower. In this depiction, what do you see? I'd probably say a keynote for me here is we have been in an overall downtrend, but we reach a point. I'd probably say a keynote for me here is we have been in an overall downtrend, but at a point after reaching a low inside the marketplace, we can see we have an overall structural shift to the upside after tapping into this last down close candle. Following that push to the upside, we can clearly see here that price gave a retracement back into the 50% of this Fibonacci level. So would you say in terms of probabilities, does this have a higher probability of going higher or going lower? Well, it's pretty obvious, isn't it? And what we can use here, well, it's pretty obvious, isn't it? And what we can use as context clues to anticipate higher or lower prices is focusing on these three things. So for number one, did we reach into a point of interest that created displacement? Well, we can see here So for the first thing, did we reach into a point of interest that created displacement? Well, we can see here we clearly have displacement inside the marketplace following the break to the upside after taking out a point of liquidity inside the market, essentially creating a market structure shift. So right here we came lower, taking out this previous low, followed by this push to the upside. This is that displacement changing the course of action from lower prices to now potentially seeking higher prices. 2, following the displacement, did order flow shift or is order flow in the direction of our bias? How can we identify order flow inside the marketplace? Is by paying attention to specific key metrics like structure and inefficiencies. How we can identify order flow inside of a marketplace is by paying attention to specific key metrics like structure and inefficiencies. We can clearly see here that price tapped into this point of interest at that last down close candle. Following tapping into that level, we see this push to the upside, taking out a previous high inside of the marketplace. This is indicating to us that price is finding support at support levels, and rather than breaking through previous lows, we're breaking through previous highs inside the market while respecting previous lows inside the marketplace, leaving them intact. These are specific questions that you should ask yourself that leaves you to respond. Is this indicative of bullish or bearish order flow? And as you can see, these are all in alignment of bullish order flow. Tapping into a point of interest, meaning we're finding support at a support level, respecting previous lows and taking out previous highs. This is indicative of bullish order flow and bullish market structure. 3, is there a drawn liquidity inside the marketplace that we can anticipate price to then target? As we can see here, we have clear areas of liquidity above us. As structure shifts from lower to higher prices, the algorithm will then seek prior highs inside the marketplace as buy side liquidity. Now that we have everything in place, do you feel more comfortable when it comes to framing a bias? Well, of course you do. You're not just magically expecting price to go higher or lower. No, you're creating a game plan whether price is going to go higher or lower based off of multiple factors that lead you to that conclusion. Now, would you say that price is more likely to go higher or is it more likely to go lower? I hope you aren't living under a rock, because of course it's likely to go higher. So after we just framed our bias, we want to then take our trade inside of a point of interest, which is based off of this Fibonacci level. We came down into that 50% of the Fibonacci level, gave a bounce, gave a slight pullback here. I want to take my longs right here, stop loss back below this previous low, as price should then respect this structural level, targeting back above higher prices, which is this buy side liquidity pool. And we can see here this offers us more than a 3-to-1 R. We want to be aiming for at least a 2-to-1 R inside of our trades. Now we can see price tags our entry, reaching back up above those higher prices. Not only were we able to dissect the marketplace and frame a daily bias, but we also caught a pretty sniper trade setup. Now I'm going to take you guys to a chart and show you guys a live example to give you guys further insight and become masters when it comes to framing a buys. Now I'm going to take you guys to the charts and show you guys a live example to give you guys further insight and become masters when it comes to framing up buys. Me and my brother Spectrades have come together and launched Tren University. Coming from humble beginnings, Tren has changed our lives and we're able to escape poverty and now live a life of abundance in only 1 year. If we could do it, everyone watching this video can do the same, and it does not have to take long. And that's why we developed a framework that anyone can use inside of Tren University that gives them the same results that we got, if not even better, and we want to hold every student's hand inside of Tren University until they are profitable. Stop going about it alone and let me and my brother be your new mentors. And for this video, I'm opening up 5 slots for the next 5 people to join Tren University. You can just click the first link in the description to join Tren University, and back to the video. In this first example, what are some key things that we can take note here? In this first example, what are some key notes that we can take here to dissect whether the marketplace is going to go higher or is it going to go lower? The first thing I want to take note of is obviously the sweep of the previous high, followed by the displacement found inside the marketplace after taking out that level of liquidity. Then I want to take note of this market structure shift, where we can clearly see here that price came higher, broke structure to the downside. Essentially, structure is shifting from higher prices to now lower prices. Then I want to take note of my dealing range. So from the highest point to the lowest point, I want to get my 50% level as that equilibrium. So I have my structure in place. We just took out liquidity followed by displacement, and I have my dealing range. Now I want to look for a point of interest, which we can identify this imbalance in the form of this bearish fair value gap, as well as I want to take note of the 50% of this bearish fair value gap level, as well as we do have this bearish breaker here, as well as I do want to identify this bearish breaker inside of that fair value gap. So we not only have this bearish fair value gap, but we also are inside of this bearish breaker. Then I want to identify, is there a draw on liquidity inside the marketplace, which we can clearly see here that we do have this low as well as these previous. Then I want to identify, do we have areas of liquidity inside the marketplace, which we clearly do in the form of not only this low, but we also have the prior daily lows as well as clear points of liquidity inside the marketplace that the algorithm will most likely seek. And just like that, we have our decision. From higher prices to lower prices, our probabilities weigh much more in favor of lower prices, meaning when framing up buys, we want to be looking for lower prices inside of a point of interest, which we clearly have this bearish fair value gap, as well as inside of this bearish breaker. So I'm going to put my entry here as price reaches up into the 50% of this bearish imbalance. Stop loss back above that breaker level, targeting back below lower prices for over a 5-to-1 R. Boom, and just like that, price comes into our entry level and immediately sees this drop to the downside, reaching back below those prior daily lows. We identified, was there displacement inside the marketplace found by this market structure shift from higher to now lower prices. Then after, we identified, was there displacement inside the marketplace, which we did identify that by this market structure shift from higher prices to lower prices after taking out this point of liquidity. First, we identified, was there displacement inside the marketplace, which we identified this market structure shift after taking out this point of interest. First, we identified, was there displacement, which there clearly was after this market structure shift. Following taking out this point of interest, following taking out this area of liquidity, we saw this part. First, we identified, was there displacement inside the marketplace. Found by this market structure shift after taking out this point of liquidity. Then we asked, was there a shift in order flow, which we can see here price coming back up into the 50% range of that dealing range. Then we asked the answer, was there a shift in order flow? There clearly was, because we had this market structure shift to the downside and price came back up into the 50% of this dealing range, meaning we're shifting from higher prices to now lower prices, and price should find respect at these bearish areas of resistance. Then we asked the question, was there a clear draw on liquidity that offered us at least a 2-to-1 R? Well, there was, back below this low and the prior daily low, and we got way more than a 2-to-1 R. This trade gave us over a 5-to-1 R, capitalizing on the opportunity. Never let the thought of daily buys scare you. It's more simpler than you think when you uncover it into these specific checklists you're bound to find success. I just want to give you a shout out for watching till the end of this video, and as a bonus, I want to give you guys access to my free trading course and my free ebook. All you have to do is click the link in the description, as well as make sure you guys like, subscribe, and comment what you guys want to see next. I'm Arkham. Be safe.